This is the bit I find interesting. It's like, sometimes there's even when things are going well, you're in the middle of a turnaround process because the market's changed. No market better demonstrates that than the silver market, which is typically and most notably quite erratic. And if I look at your share price last year, fairly erratic. You've had big highs, big lows, but you kind of ended up sort of where you started off. Was that caused by some of these legacy issues that you're talking about, or these ongoing mining issues, or the new team coming together? I mean, what was the cause of that?
I think it's actually the silver market right now is quite interesting. Particularly over the last 18 months or so. When you look at our peer group, as you said, started at A, bounced around, and then ended at A. You can look at many of even the big companies in the peer group, and they haven't kind of seen that almost stratospheric increases in share prices that many of the gold companies have seen. And when you look at silver over the course of time, that is kind of the way things go. Right now, we're at a gold-silver ratio of 89, almost 90 to 1. And the historical norm is between 55 and 65 to 1. So we're in a very challenging place for silver right now. The other aspect of silver that has been tricky over the past little while is most of us are producing a concentrate. So we're not producing doré. Some of us are, but a significant portion aren't. We're producing lead and zinc along with the silver, and treatment charges for that lead and zinc, particularly on the zinc side, have increased significantly over the past couple of years. So that's added another economic challenge to the business, and something that's affecting the entire peer group.
Right. So this brings us nicely on to the business plan. Okay. So silver company, you've got assets in Mexico, one which kind of threw me, Germany. And obviously now and we will talk about Otis in a second.
Yeah.
We will talk about Otis in a second, which is obviously gold. And you're looking at different ways to mitigate the ongoing risks involved in mining and silver mining in particular, obviously. So, and you mentioned, you made a point of mentioning this team that you're building up. I mean, can you give me a sort of sense of the track record of the people involved? I do want to talk about some of the shareholders in a minute, but what have you done which has created value for shareholders in the past?
That's a question my wife has asked me at times as well. I came from Davies Ward in Toronto, which was one of the preeminent M&A firms in Canada. And then I went into mining around 2008, or exploration specifically. And actually, I started at a company called Plangio Mines, which acquired the Detour Lake deposit back in the late 90s. Ingrid Hibbard was CEO. She just joined the board of Kirkland Lake, actually. And I won't go through the whole details, but an amazing transaction at the bottom of the market for $1.5 million acquiring the Detour Lake deposit. So we spun that into Detour Gold around 2007, and through a series of transactions, ended up merging part of Plangio back in with Detour. And the returns that we saw from that, I bought Plangio stock when I was a student, I think off my student loans, and at 10 cents, right? And by 2000, that was probably around 2002, and by 2011, it had returned 11,000%. So that's kind of where I came from. We went from there, that transaction, to doing a series of acquisitions in Ghana, West Africa, making a number of discoveries and seeing our return to shareholders increase further from there as well. On the rest of board and management, Ben Pollinger, our senior VP geology, was at Roxgold. He was with me at Plangio as well, so saw those returns, and then went over to Roxgold, high-grade success story in West Africa, bringing exceptional asset Yaramoko from an inferred resource through to production from 2012 to 2016. Great success story there. Anna Ladd-Kruger, our CFO, was at Kinross and then was at Trevally from the very early days, 50 million market cap, all the way through to the $1 billion deal with Glencore. So I saw huge returns for shareholders there.
Beautiful. That's great.
I could go on.
No, I guess that sounds like you could. So let me stop you. I think that gives us a flavor. Okay, so there's a real mixture there of finding value in the rocks, the geology. I mean, I like the Roxgold story particularly. I think it's a great business model as well. Big fan of John. You've also doing it through M&A, which is what you're doing here. So is that the plan going forward? Is the plan to gain or get shareholder value gains through acquisitions? Is that the plan? Or are you also going to be looking at the rocks?
We have a really simple vision. It's almost embarrassingly simple. It's just to create wealth, right? That's it. Create wealth.
How?
And I mean, anybody in business should be looking to do that.
Tell me how. Tell me how.
How. Exactly. So, what we've got in this industry in particular, right? You really have to be involved in the entire growth pipeline, because markets change, commodities change, investor sentiment changes, access to capital changes. So we have production now. With the acquisition of Otis Gold, we have development, gold development in particular, and we have a significant exploration portfolio. And the way this portfolio, our entire portfolio or growth pipeline is organized, we have immediate leverage to metal prices, silver, lead, and zinc. Silver being better than lead and zinc right now. We have a gold development project which has a significantly higher potential value than our producing assets. You want to be able to grow into that yet better asset. And then we have a number of exploration properties. And you need a portfolio of exploration properties because exploration is risky, right?
Yep.
And trying to make a discovery on one property is, it's like playing high card.